Good morning, everyone. Welcome to our fifth installment of the Borak Bersama Maybank series. Today we have Mr. Liaw Thong Jung, better known as TJ, is our senior analyst covering oil and gas. Also, I guess everyone in the organization's go-to person with regards to oil and gas and the sector. Welcome to the show, TJ.
Thank you. Good morning. Thank you.
So TJ, oil and gas rated stocks were pretty heavily traded last week, and prices also saw quite substantial gains. Looking beyond this, I think the question now is whether these stocks still have any upside or basically is already jalan. But before you answer that question, let's first give everyone a bit of background on what has happened. Tell us a bit of what happened last week with regards to OPEC.
Okay, good morning. What happened last week was basically caught the market by surprise. What the OPEC Plus PEC did was that they cut production by 1.66 million barrels per day. I think that's about 2% of global supply. So market expectation then was expecting status quo, no production cut until end of this year. But having said that, with the weakening of oil price and potential concern over some pockets of recessions around the world, the OPEC Plus made a decision, a decisive one, to cut production, and that led to an increase in oil price above $80 per barrel overnight, and now it's sustaining over $80 per barrel now. So that's what happened last week. That basically provided the positive push to the overall oil and gas markets.
Yeah. Clearly, you cut production. Basically, it's a supply and demand situation whereby less supply, demand prices will come up. I guess this is for obvious reason has a lot of benefits for Malaysian oil and gas stocks, or not really. So
in general, it always have an impact to the oil and gas stocks whenever there is a push in oil price, or the other way around. So looking at the way the oil and gas stocks in the Bursa performance last week, I think you could say that I think it brought a positive performance to all the stocks that we have in the market. So companies like the upstream players, E&P, I think they will basically benefit the most because they are most correlated to the performance of oil price in general.
So maybe I think for the benefits of our audience as well as the investors out there, maybe you can just go through the recommendations you have, the top picks in the sector, juxtaposing this with the incident that we had last week, and see whether there are still any leaks left.
Yeah, sure. I think like I mentioned now, to expand further in a rising oil price, I think the best energy stock play would be Hibiscus because they are pure E&G upstream player. Because every $10 increase in the oil price will basically translate into a bigger bottom line to them. So sensitivity to them is that for every $10 increase in oil price, I think bottom line could basically go up by at least 60 to 80 million ringgit per annum. So that is basically on Hibiscus, which is one of our key buys as well. Apart from that, I think most of the fundamental stocks that we like, the two key ones are the likes of Hussin as well as Dialog. I'll talk about Hussin. Hussin is practically an FPSO operator, but they are also transitioning into the green energy market, which is good in a way that if you were to look at Hussin as an FPSO player, they are basically akin to an IPP player, cash flow generative, basically offers much cash flows and also profits. So for Hussin itself, what market has not priced in is the fact that this company is going to be a 1 billion net profit company in 2 years' time based on the projects that they have in their pipeline. So market has yet to basically price in. I think there's a lot of opportunities to be made from this company called Hussin. But apart from that, I think in terms of energy transition, I think Hussin is one of the forefront players in terms of energy transition. They have a very clear roadmap in terms of how they're going to achieve their net zero and also carbon neutrality. So in a way, I think Hussin is one of the key picks, growth as well as valuations. The next one will be Dialog. Everybody knows about Dialog. I think they are the key tank terminal operator in Pengerang, Johor. If you were to look at the way they run, they are very, management is very focused, very lean. They have an eye for bottom line. If you were to look at Dialog, they have basically grown tremendously since they were listed in the late 1990s. And now they have basically shown that they are basically one of the giants in the oil and gas industry. Looking at Dialog, I think there is a long-term growth play in Dialog, i.e. how Pengerang is going to pan out in the future. Looking at the land size that they have, which is available for projects, I think they are only wanted to full optimization in terms of their yard space now. So if that is the case now, it looks like Dialog is a great buy. Good growth expectations, solid management, and also a very unique business proposition that they have now.
These are the two names that you like. I think I'm interested to know what Nick Iksan thinks about these two stocks while looking at the charts, but clearly I think there's some trends there. Not putting you on the spot, these are the two stocks that you like. What are probably the two stocks you don't like, even though with this OPEC situation at its current juncture?
Yeah, I think for the companies that have basically high debt, very weak balance sheet, I think these are the companies that will have to go through restructuring, refinancing. So the likes of Sapura Energy will come into mind. Right now, they are now a PN17 stock. They have basically close to 10 billion ringgit in terms of debt. So in a rising energy price, you look for companies that could leverage on these sort of oil price appreciation. But unfortunately, with companies like Sapura, I think they have more pressing matters in their mind now, rather than to chase all these projects and all this. I think what they want to do is to basically try to clean their act internally before they can basically be leaner and be ready for them to basically move beyond that. So that is Sapura. Then I think to a lesser extent, I think I would say that in a FPSO business as well, Bumi Armada is one of the stocks that we recently downgraded, in a sense that I think share price has moved ahead of valuations. So I think, yeah, these are the two names I would probably think of for now.
Okay, so again, in a nutshell, Sapura Energy, I guess it's fallen from grace, so to speak, PN17, a lot of issues. And Bumi Armada, I guess it's kind of fully valued, so I think probably it's time to take profit.
Yes.
Okay.
Yep.
All right. Well, anyway, thanks, TJ, for your thoughts and analysis. But I guess that's all the time we have for today. I think this is great insight, especially for our audience. Thank you so much for sharing with us today, man. Really appreciate it. And I think for TJ's situation right now, I think he will probably be inundated with a lot more questions from all the other teams. Again, to my audience, to everyone else, you can get latest market news and research from our social media channels, i.e. Telegram, as well as Trade with Maybank, LinkedIn, and even our YouTube channel. You can just reach out to our respective salesperson if you need any further information. Also, if you have enjoyed today's copy session, Borak, do consider dropping us a like or even subscribing, and we'll see you in the next one. Till then, looking forward to seeing you in the next Borak with Maybank. This is Naguib signing off.
Do 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 do.